Alright, this video is about why I sit on cash, why I put all my money in cash. I want to buy when I see a good opportunity. So when I see an opportunity, I have money to buy with. And I'm just going to use this as an example. This is my 401k plan. Basically, I have the only fund I can buy with tech. It's this American fund, which is not really a tech fund. But if you look at the holdings, it's pretty much tech. So I use that as my tech investments with my TIA account. And you can see this whole time has been kind of bland. And I did do a buy back on 10/7 for 45.56. On 10/10, it went all the way down to 44. That was its low at 44.86. You remember I say buy and hold in October, so that's what I did. Hoping to get rewarded. I don't know. Did I get rewarded? It's at 51 right now. At 45, or actually off its low at 44. To get 20% off its low, I need 9 points, basically 4.5 times 2, 9 points. That takes me from 45 to 54. I have to get to 54 to get to 20%. So for me, a 20% rate of return in 3 months isn't really that great of a return on a tech fund. I mean, it's good, don't get me wrong. NASDAQ going up 20% for 1 year is considered to be really good market. But for me to be buying on a low and then getting rewarded at 20%, I was hoping for bigger returns than that. I just been sitting on money since then. I bought very little from October till now. I'm just sitting on cash. And a lot of people might hear me say things like, leaving money in cash is guaranteeing loss of money. You're guaranteeing that that's not going to make money. Okay, so yes, that's true, but also not losing money is making money. So I'm glad I didn't buy in this range. I'm glad that the last year I waited until October to buy because I was buying on a much lower price. Didn't get the jump I wanted, but at least I'm still buying when I think I should be buying on a lower price and saving money and looking for new buying opportunities. I did buy some small caps and some value funds, but I have not put a whole lot in there. I'm just trying to pile up as much cash as I can. So for someone that says, leaving money in cash is guaranteeing you a loss, I'm not leaving it there. I'm just waiting for an opportunity to buy. What's the holdup? Why have I not been buying all this time? It's the CPI report. To me, this is the number one thing that's going to drive the market. May 10th will be the report for what's going on for April 23rd or April 2023. So we'll see our year-over-year gains. And the reason why this is so important to me is you're going to see the market fluctuate a lot on earnings. All the stocks have revised their earnings down so that when they announce their earnings, they're going to beat their earnings. And then, like today, the market's going up. So you'll hear companies are outperforming, but in reality, it'll probably go back down because they're going to say, well, outperformed only on the lower revised or not earnings, not the earnings they had forecasted a few months ago. And then there's going to be a lot of talk about, hey, we're going into a recession. And the more important thing is not how much they've earned last, but how much they're going to earn in the future. And the forecast will probably be down, which could really drive the market down, heading us towards that recession that we need to hurry up and get over with. Bottom line is the Fed will make an announcement in May to probably raise rates again. And it's going to be all based on the report on May 10th. So this is huge, and to me, the PPI and the CPI reports that are coming out May 10th and May 11th are going to be the driving factor for the Fed to be able to justify the 0.25% rate of return. So what would really help us is if on the CPI report we can get low numbers. We need to get under 300 here. We need to get to 4.9 or less for this next earnings report. So May 10th is a long ways away. There's a lot of things that can happen, but you can bet I'll be up at 5:30 in the morning Pacific time, and I'll be ready to pull the trigger on 4.9 or less. I think mentally a 4 is going to be nice, and anything above a 5, even 5 is not going to be that great. Anything above a 5, probably going to drive the market down. Since we hit 5 last month, everyone is looking for a trend down. If this hits 2%, I'm going to bet everything I got. I'm sitting on a lot of cash. If this were at 2%, I'd sell my house to get whatever I can in the stock market. But I doubt it. I'm hoping for 4.9 or less, maybe 4.9. It will get. I don't know. I don't really have any reason to believe it's going to be 4.9, but if it is, I think mentally just being in the fours will drive the market up. I don't know. I could be wrong, but you see, last year what we got to do is last year it was up 8.3%, and the year before it's 4.2%, and the Fed wants 2%. So I doubt we're going to get 2%, but again, mentally, it will be showing the direction of going down towards where we want to go. So I think it will have an immediate increase in the market if we can get that 4.9%. So again, that date will be May 10th. May 11th is the PPI report. I think those two things could be the ones that drive the market. If the market is down, and I got this, maybe this American funds is down to 45 or down under, it might not be American funds, it might buy small cap or something else, because I'm already in at 45 anyways. But if the market's down, maybe under 40s or under 50 something, maybe I will put in money on the 9th before the market announces that news on a gamble that it's going to go up on or it'll be something less than 5. So really the bottom line is until these numbers start going down, we're going to be fighting the Fed, and the rule of the market is don't fight the Fed. The Fed says the market's going to go down. If the Fed says he wants the market to go down, if the Fed says he's going to jump rates, probably going to see the market go down on that news. So watch out for the 10th. I'm just kind of sitting and holding till that date.